Business is more than grinding to get it done. It's people, process, and payroll done right. It's protecting your team, leveraging every penny out of every dollar to build and grow. From HR to insurance, from strategy to scale. We give you the playbook so you don't have to figure it out the hard way. This is the PEO Playbook, hosted by Chad Philly with Staff Brokers Inc. Get valuable insights and learn to grow your team without HR headaches. Let's get started.
All right. Welcome to the PEO Playbook podcast. I am Chad Philly with Staff Brokers. On this week's edition, we're just going to talk about some of the basics of some of the time savings and how PEO is going to benefit small businesses with less accounting and less meetings that have to go on throughout the year. Obviously, the object of PEO is to bring a lot of resources that a business would have to reach to different places for in order to get and kind of consolidate them into one space to save some time and effort in meetings that ideally business owner can turn around and go use those things to grow the business, make the next sale, do some marketing, get out of town early to go to their kids' volleyball game, whatever it may be, whatever that business owner wants to do. Go fishing, so be it, whatever it's going to be. But, typically a business that's set up, if they're doing their own payroll in-house, there is your regular weekly processing that takes place. That requires calculation of taxes, live checks within the company that have to be bought and purchased somewhere, written out, whether it be handwritten, typed out, computer printed, etc. All those things are repetitive. It's a lot of accounting. You're typically waiting on every single check to clear, especially if you're not doing direct deposit. So some extra accounting that's on the table there for businesses doing it that way. When moving over into a PEO environment, one of the big things that makes a difference for them is everything happens in one transaction. Every week, payroll is run, it is reported. All the taxes, all the administrative costs, all the workers' comp, everything that's done is taken in one fell swoop out of the business owner's account. You can one-line item it. You don't have to break down the cost of every single employee. You can one-line item it in QuickBooks or whatever your accounting software is that you use for your business, for your profit and loss statement. Turn that into a one-line item, and then later on after the fact, if you ever need a breakdown, your PEO provider can in turn provide you with a breakout for every single payroll and exact cost and taxes for every single individual person. But it frees up a lot of accounting time from a business owner's point of view of having to look back and see where is everything at. One transaction, it goes out of your bank account. That's all that's coming out of your bank account for what's associated with payroll, that particular week. In addition, it brings into the fold another meeting that you don't have to take is meeting as it relates to your workers' comp. Every year, standard workers' comp procedure is you set up a projection of, hey, this is how much business we're going to do from a payroll point of view. And then at the end of the year, they go back and they match up how much you said you were going to do versus how much you actually did. And they call that the audit phase. And then they do all the math and determine, did you underpay or did you overpay? A lot of time business owners, they have a good year and they grow. And then at the end of the year, they have a work comp audit and they weren't cognizant of how much they were growing and how much greater their payroll was than they expected. And then all of a sudden, their payroll was 50% more than they expected. And then they have a bill at the end of the year for their work comp policy that, to square up for the year in addition to their deposit for the following year, creating a potential cash crunch and a couple different meetings with their insurance agent about work comp to set up what are the projections for the following year to make sure everything is on the same page. So this system, because the work comp is tracked with the payroll, it eliminates that audit. Work comp premium is paid to the penny every year. Every week the payroll is run, thus it comes out dead on at the end of the year, eliminating year-end audits as well as a potential cash crunch at the end of the year if you're not prepared. Same thing if you're not doing payroll in-house, but they have a payroll provider. Still extra meetings and extra accounting that have to take place. A lot of the payroll providers are coming over to the one withdrawal system that we were talking about each week, but a lot of them there is a withdrawal for, hey, this is for taxes, this is for administrative cost. And then you have individual checks that cash for every employee. If you've got 20 employees, 20 extra accounting things that you have to figure out and account for every single week versus one transaction and being done with it, move on about your day as a business owner and on to what makes you and generates you some more money. Same thing because of the tax relationship and the tax filings, the 940s and the 941s that are your quarterly and your year-end tax stuff. Those are generally accountant-related meetings that have to happen. There's an elimination of those because everything is tied in and wrapped and filed underneath the federal ID number of the PEO company and association for your for the business owner. That in turn eliminates all of that, eliminates, several other meetings that having that you can't get rid of you cannot get rid of your accountant altogether. You still need them at the end of the year for business revenue tax, sales tax, that kind of thing. PEO does only but specifically deals with the employee and employer related taxes and the filing of those. So something else that you would be using an accountant for, but in this case, the PEO is handling it. Also gets further involved if you have healthcare and you have healthcare through the PEO. They handle all the year-end filings that are associated with that, eliminating a couple extra meetings. They deal with the renewals, having to go and select all the new and different healthcare options that might be out there. PEO has an entire healthcare department, benefits department that is out there looking for all of those things. Even for small businesses that may not offer major healthcare, they may say, hey, well, that doesn't involve me. That's not a thing. But a lot of those small businesses do offer group vision and group dental, of which they don't have to pay a portion or may not have to pay a portion of. And also your supplemental insurances, your accident, your group life, disability, those kind of things. PEOs bring all this stuff together for business owners under one roof so that they have access to all the stuff in one place. They don't have to go back through and, have multiple meetings with all these different vendors in any given year, ultimately saving them time year over year, saving them hours and hours of time over the course of a year so that they can ultimately work on growing their business and what impacts their business and their employee base the most, rather than being tied up with constantly having to redo these repetitive tasks every year. Once a year doesn't seem like it's a lot, but it typically always comes at the most inconvenient time. So having a system in place like a PEO is something that is vital to allowing business owners more freedom to focus on what it is that generates them the most revenue. In addition to that, the biggest thing is it's a time savings. There's less meetings, but you also have experts in your corner. The PEO companies have experts in all the different divisions of payroll, work comp, human resources, benefits. It allows one place for business owners to go to get quality resources. Big thing being that the PEO is a co-employer with you. They are a partner in it. It is part your employee. It is part theirs. You know that they are going to give you the most up-to-date current information to help keep you and them from the risk of a lawsuit. So they're going to make sure that everything is done properly in the best way humanly possible. And that way, if and when an employee decides that they're going to be disgruntled, you at least have the best potential defense that you can, because the employer has done the PEO has helped as much as possible with making sure that you have done and followed the proper procedures so that you have a decent defense when it comes to dealing with employee-related matters and how you handle them on a weekly basis. As far as general savings, as far as PEOs and how it saves them, time is the number one biggest thing that saves them. Time cannot be recovered. Business owners need to spend it wisely. And that's this week's edition of the PEO Playbook. Again, I'm Chad Philly with Staff Brokers, and you can reach out to us at PEOplaybook.com with any questions that you may have come up with throughout this podcast. Thank you, and see you next time.
Thanks for tuning in to the PEO Playbook, where we help business owners unlock the power of PEOs and take their team to the next level. This episode was proudly brought to you by Legacy Sales Engineering. If you're ready to simplify HR, scale your business, and put the right team behind you, visit staffbroker.net to get started with Staff Brokers today.